Could a market crash be right around the corner? Some experts are warning that a major downturn could be coming, and if it hits, it could be worse than many anticipate. You might be thinking, how does this affect me? But if you're holding XRP, this is something you need to take seriously. In fact, this potential crash could have a significant impact on the value of your investments. The term Black Monday often refers to a sharp market drop that sends shockwaves through the global economy. We've seen it happen before, most notably in 1987, but recent trends and market conditions have many speculating that another major downturn could be upon us. Whether you're an experienced investor or new to the game, the reality is that market crashes can have a ripple effect on all assets, including cryptocurrencies like XRP. Although digital currencies may seem detached from traditional financial systems, they often follow the same trends, especially when it comes to investor fear and panic. If the traditional markets experience a significant dip, cryptocurrencies might not be able to avoid the fallout, and XRP could be caught in the turbulence. The last thing you want is to be caught off guard when things start to spiral, so it's important to understand how these market shifts might affect your investment and what steps you can take to prepare. This isn't about panic, it's about understanding the risks and staying ahead of the curve so that if things do take a downturn, you're not left wondering what happened. To truly understand the impact a potential market crash could have, it's important to first look at what Black Monday really means. In financial terms, Black Monday refers to a sudden dramatic drop in market prices, especially in traditional stock markets. The most notable example was the crash in 1987 when global stock markets tumbled, and it sent shockwaves throughout the financial world. Over the course of a single day, the stock market lost nearly 23% of its value, a drop that left many investors in shock and scrambling to minimize their losses. While that particular crash is remembered as one of the most severe in history, the idea of a Black Monday isn't limited to one event. In fact, it could refer to any sudden downturn that shakes the markets and causes widespread panic. So why should XRP holders be concerned about a potential Black Monday? The truth is, despite being part of the crypto market, XRP doesn't operate in isolation. Cryptocurrencies like Bitcoin, Ethereum, and XRP are still highly influenced by what happens in traditional financial markets. When the stock market or global economy experiences volatility, cryptocurrencies tend to follow suit. This is because many investors treat crypto as part of their broader portfolio, and when traditional assets like stocks or bonds take a hit, people often sell off a variety of their holdings to minimize risk, including their digital assets. This kind of sell-off can lead to a rapid decline in crypto prices, and XRP would likely not be immune to these fluctuations. Even though XRP is seen as having strong real-world use cases with Ripple's focus on facilitating cross-border payments, the general sentiment in the market can still have a large impact. When fear spreads in the financial world, investors tend to move towards more stable assets, leaving speculative investments like XRP vulnerable. So if we're heading into a Black Monday situation, it's crucial to understand that XRP, just like other assets, could face significant price drops due to the domino effect of panic selling across markets. This is something every XRP holder needs to be prepared for. Knowing how these market dynamics work and anticipating how XRP could react could help protect your investment when things start to look uncertain. Now that we understand what Black Monday means and how it could potentially affect the broader market, let's take a closer look at how XRP could be impacted during a market crash. When the financial markets start to decline, especially in a sharp and sudden way, it's not just stocks that suffer. Cryptocurrencies, including XRP, often experience a similar level of volatility. While XRP has a unique position in the market due to its real-world utility in facilitating fast and cost-effective cross-border payments, it is still deeply intertwined with global financial systems and investor sentiment. One key reason XRP could be affected in a market downturn is due to the behavior of investors. When markets are stable, investors are more likely to take risks and hold assets like cryptocurrencies, including XRP. However, during periods of heightened uncertainty, people often flock to safer assets like gold or government bonds and away from riskier assets like stocks and cryptocurrencies. This shift in investor behavior is triggered by fear, and fear leads to massive sell-offs in both traditional markets and crypto markets. If a Black Monday scenario were to unfold, we could see XRP's price drop sharply as investors panic and liquidate their crypto holdings in an effort to preserve capital. Another factor that could negatively impact XRP during a market crash is the ongoing legal issues Ripple faces with the US Securities and Exchange Commission (SEC). Although Ripple has made significant strides in defending XRP, any negative developments in this case could exacerbate the fear and uncertainty already present in the market. If the SEC case takes a turn for the worse, it could further drive investors away from XRP, causing a sharp price drop in an already fragile market environment. Moreover, it's important to remember that even though XRP is used by financial institutions for real-world applications, the cryptocurrency market is still driven largely by speculation. The reality is that XRP's price, like many other digital assets, is influenced by market sentiment, news, and broader economic factors, not just its utility. So when market conditions become shaky, XRP could still be affected by the negative psychological impact of a Black Monday scenario. Panic and fear often drive price drops, and no cryptocurrency, including XRP, is completely immune to these forces. However, it's not all doom and gloom. While a potential market crash could hurt XRP in the short term, history has shown that after significant downturns, markets often recover. Those who are able to hold on to their assets through periods of volatility may come out on top when the market stabilizes again. XRP holders should keep in mind that this is a long-term investment, and while a market crash might cause some temporary setbacks, the underlying value of XRP's real-world use case remains strong. This means that even if the price drops, there could still be opportunities to buy at a lower price and hold for future gains. Understanding the risks and how XRP might react to market shifts is crucial, but it's equally important to stay focused on the bigger picture. By staying calm, monitoring the market, and being prepared to make informed decisions, you can weather the storm and potentially capitalize on future opportunities, even in the midst of a Black Monday scenario. Now that we understand the potential impact of a market crash on XRP, the question remains: what should XRP holders do to prepare for a potential downturn? While it's impossible to predict exactly when or how a market crash like Black Monday might happen, there are steps you can take to minimize risk and protect your investment. First, risk management is key. No one likes to think about their investment losing value, but in the world of cryptocurrencies, volatility is a given. That's why it's essential to have a strategy in place to manage risk. One important strategy is diversification. While XRP may be a significant part of your portfolio, spreading your investments across other assets, whether that's other cryptocurrencies, stocks, or commodities, can help cushion the blow if one particular market takes a hit. Diversification reduces your reliance on a single asset and can help smooth out the ups and downs in your portfolio. Another risk management tool to consider is setting stop-loss orders. A stop-loss is an order placed with an exchange to buy or sell an asset when it reaches a certain price. For example, if you set a stop-loss for XRP at a specific price point, the exchange will automatically sell your XRP when it drops to that price, limiting your potential losses. While it's not a perfect strategy and it could sell off your assets in a temporary dip, it can help protect you from deeper losses in a market crash.